Hello, in this video, join me as we continue to learn our lessons from the book Rich Dad Poor Dad by Robert Kiyosaki. And this is video number 21. Join me. Hello, welcome back to Take a Step to a Better You. On this channel, I share what I know and continue to learn. And in this video, I'm sharing my lessons from the book Rich Dad Poor Dad by Robert Kiyosaki, and this is video number 21. If you are new, my name is Sherifa, Nakalema. I'm a business owner here in Virginia, USA. And on this channel, I share YouTube tips, business tips, earning money online tips, and this will be specifically through affiliate marketing. I also record motivational ones just to encourage you to take a step, make your life better. And recently I added books, and I'm loving it, and I hope you're going to love it too with me, sharing what Robert Kiyosaki learned, and he wrote in a book, and we're reading it, and I think it's great. So if you are new, please consider subscribing, because I think what we're doing here is good. And congratulations to me and to you. I finally got to 9,000, not 10,000 yet, 9,000 subscribers. Thank you very much. Appreciate that, but you're still going. You're still going, looking for another 1,000, so you can get to 10,000. Please share the videos. And don't forget to leave a comment. Please, 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 always like and leave a comment before you leave, or don't like, but still leave a comment. Tell me why you didn't like. Now, for those of you who are new, I'm going to explain everything I do here at the end of this video, because I do a lot here, but the only thing I need to mention now is that this is video number 21. Video number 1 up to 20 are found in a link I pinned on top of the comments. When you click on it, it's going to play all videos from number 1, from the first time I introduced this book, from the first time I talked about Robert Kiyosaki, and then it will continue all the way, non-stop. It's a playlist. I call it Lessons from Robert Kiyosaki. It will also come at the end of this video, at the end screen. It will also a link in the description box below. I'm also, for everyone, I share how you get. Finally, I saw the word they use to get to this book on Amazon Audible. So I share at the end of this video. If you want to get the Audible kind, or just the physical book, if you want the real book. But the Audible is free for 30 days. Of course, the book you have to buy physically. If you want the real book, you have to pay for it. Okay, this is video number 21. Is chapter 2, lesson 2, continuation. And the lesson is, why teach financial literacy? Why do we need to learn? Why do we need this financial education? And always and always, I have to talk about Robert. Who is Robert? He's a self-made millionaire. He's an entrepreneur. He's an educator. He's an investor with a mission, a big one, to elevate the financial well-being of humanity, starting with one life and one person at a time. Consider yourself to be that one life, that one person is talking about, because you're committed to being here, and appreciate you. These lessons can change your life, especially if you are younger. If you are like in the 30 years and under, you could be a millionaire with just these lessons, with just following what you are doing right here. For those of you, and then I have to also, I have to define Rich Dad Poor Dad. For some reason, I tend to forget. I have to remind you why the book is called Rich Dad Poor Dad. Robert had 2 dads. One was his real father, who was a very intelligent man, very well educated with a PhD, and he was a superintendent of education, but he ended up dying broke. And then there was this rich dad that Robert learned from, and that was his friend's dad, his friend Mike. At the age of 9, Robert was asking his father, how come he's not rich? Teach me about making money. And then he said, me, I really don't know about how to make money, but you can go to Mike's dad. He's promising, I think he's going to do great things. Go talk to him. So that's all started. If you went and watched all the videos, then they start going to work for Rich Dad. And those are the lessons that we got there. Robert got there, the ones he put in a book, and we're learning from him, because he was an interesting man. He left school at 13, in 8th grade. 8th grade is where he was, his level of education, formal education. And then he ended up being one of, I like to read it because he said he became one of the wealthiest men in Hawaii. When you see me reading, I'm trying not to get something wrong, because if you follow me, sometimes I mix up words when I'm speaking. And me, I don't edit videos, so I mix up words. But when it's not a big deal, I let it go because I know you follow, you understand. But when it's important, I like to read it the way Robert said it in the book. That's why I have to read. And today we're going to read. Most of it is coming from the book, except here where I have to remind you. I have to remind you where I ended with video 20. We ended when I got it from the book. It's right here. Like Robert was saying that if you want to be rich and maintain your wealth, because there is being rich for a week or a year or 2 years, but if you want to maintain it, it's important to be financially literate. And that's this lesson too. In words as well as in numbers. You have to know how to read words and numbers, like those financial statements. That's why I say, although Rich Dad left school at 13, I think really we need the formal education. And especially if you can have a way to learn how to interpret the financial statements, the income statement or profit and loss, balance sheet, those are really important. Even if you didn't do all the accounting details, but you knew how to read the numbers, because that's how you know. I tell my stories of my cleaning business that I stopped the model I was following. After they handed me my statement, just 1 year, I had done it really well. And then one time, it took a while to produce a statement. And for the first time, I got a loss. I said, I'm working all these hours, we're working all these hours and we get a loss? No. That's when I changed the model. I changed the model of the way of running it because of financial statements. Otherwise, if I was just looking at my bank account, I would have said things are great. But until you know what's really going on, so those numbers, that's my side thing that I just said at the beginning, by the way. It wasn't planned, you know me. Sometimes things just come up. It's so important that you know, if you're running a business, what's really going on. Having cash in the bank is not enough. Is this a profit or is it a loss? What's going on? When I was landed a loss, I changed everything and things have gone better, because there's no reason why I should work 14, 15-hour days and I ended up with a loss. So what's the purpose? See what I mean? Okay, we are going to now 21. I just reminded you that financial literacy is important. So we're going to this book. Today I'm reading, and you're going to hang out a little bit with me, because whenever I cover the reading, I want to make sure I get to the point of before I stop. So today, we're going to take a little moment. Okay, we ended there, and then now Robert is continuing that in financial reporting, reading numbers is looking for the plot, the story of where the cash is flowing. In financial reporting, reading numbers is looking for the plot, the story of where the cash is flowing. You know, he had diagrams he was showing here. So he was showing it's going out, it's going in. You have to know where the cash is going. That's what he's saying. So in 80% of most families, now he's talking about you, the financial story paints a picture of hard work to get ahead. However, this effort is for note. You know, he said note is N-A-U-G-H-T. N-A-U-G-H-T. I don't know if I'm pronouncing it right, but note is what I say. This effort of hard work is for note because they spend their lives buying liabilities instead of assets. Remember, it's been our lesson following us. He's still pumping it out. It's so important to know what you're buying, what you're spending your money on. The next reason, I skipped some, by the way. There are diagrams and something that I just skipped, but I feel will be fine. Then the reason I started with the story, Robert is saying, remember when we started this chapter, he was talking about the rich men who ended up, some in prison, some dead, some committed suicide. Remember that story? So he's saying, the reason I started with the story of the richest men in America is to illustrate the flaw in believing that money will solve all problems. That's why I cringe whenever I hear people ask me how to get rich quicker or where they should start. I often hear, I'm in debt, so I need to make more money. But more money will often not solve the problem. In fact, it may compound the problem. Money often makes obvious our tragic human flaws, putting a spotlight on what we don't know. That's why, all too often, a person who comes into a sudden windfall of cash, let's say an inheritance, a pay raise, or lottery winnings, soon return to the same financial mess, if not worse, than the mess they were in before. Money only accentuates the cash flow pattern running in your head. If your pattern is to spend everything you get, most likely an increase in cash will just result in an increase in spending. That's the saying. A fool and his money is one big party. His money is his word. He always makes me smile. He said the saying, a fool, this is the quotes, a fool and his money is one big party. I've said many times that we go to school to gain scholastic and professional skills, both of which are important. We learn to make money with our professional skills. In the 1960s, when I was in high school, if someone did well academically, people assumed this bright student would go on to be a medical doctor because it was a profession with the promise of greatest financial reward. Today, doctors face financial challenges I wouldn't wish on my worst enemy. Today, doctors face financial challenges I wouldn't wish on my worst enemy. Insurance companies taking control of their business, managed healthcare, government intervention, malpractice lawsuits. Today, kids want to be famous athletes, movie stars, rock stars, beauty queens, or CEOs because that's where the fame, money, and prestige are. That's the reason it's so hard to motivate kids in school today. They know that professional success is no longer solely linked to academic success, as it once was, because students leave school without financial skills. Millions of educated people pursue their profession successfully, but later find themselves struggling financially. They work harder, but don't get ahead. What is missing from their education is not how to make money, but how to manage money. It's called financial aptitude. What you do with the money once you make it, how to keep people from taking it from you, how to keep it longer, and how to make that money work hard for you. Most people don't understand why they struggle financially because they don't understand cash flow. A person can be highly educated, professionally successful, and financially illiterate. These people often work harder than they need to because they learned how to work hard, but not how to have their money work hard for them. Next has like a subtitle, and it says, how the quest for a financial dream turns into a financial nightmare. How the quest for a financial dream turns into a financial nightmare. The Clark story of hardworking people has a set pattern. They are recently married, they are happy, the highly educated young couple now share a cramped rent. Recently married, the happy, highly educated young couple now share a cramped rented apartment. Immediately, they realize that they are saving money because two can live cheaply as one. Can live as cheaply as one. That means you have double income. But then one income is enough to spend to finance your lifestyle. So the problem is the apartment is cramped. That means They don't have enough space. They decide to save money to buy their dream home so they can have kids. They now have two incomes and they begin to focus on their careers. Their incomes begin to increase. He has some diagrams here, but I said we can survive without his diagrams. Okay. The number one expense for most people is taxes. Many people think it's income tax, but for most Americans, their highest tax is actually Social Security. As an employee, it appears as if the Social Security tax combined with the Medicare tax is roughly 7.5%, but it's nearly 15%, since the employer must match the Social Security amount. That's why I made losses. Remember I mentioned losses because of these taxes I was paying for the employees. In essence, it is money the employer can't pay you. On top of that, you still have to pay income tax on the amount deducted from your wages for Social Security tax. Income you never received because it went directly to Social Security through withholding. Going back to the young couple who was trying to explain the tax situation. This is only relevant for people like in USA, they would understand this. But actually other countries too, they take those deductions. They deduct money from your paycheck. Going back to the young couple, as a result of their incomes increasing, they decide to buy the house of their dreams. Once in their house with a mortgage, they have a new tax called property tax. Then they buy a new car, new furniture, and new appliances to match their new house. All of a sudden, they wake up and their liabilities column is full of mortgage and credit card debt. Their liabilities go up. They are now trapped in the rat race. Pretty soon, a baby comes along and they work harder. The process repeats itself. Higher incomes cause higher taxes, also called bracket creep. Bracket creep. A credit card comes in the mail. They use it and max it out. A loan company calls and says their greatest asset. He puts asset in the home in asset because it doesn't give us an asset. Their greatest asset, their home, has appreciated in value because their credit is so good. The company offers a bill consolidation loan, and tells them the intelligent thing to do is clear off their high interest consumer debt by paying off their credit cards. And besides, mortgage interest is a tax deduction. They go for it and pay off those high interest cards. Because please remember this, what I'm saying right now, because I have a question for you at the end about this couple and how they behaved with this, the way they dealt with their debt. Because it says, besides, mortgage interest is a tax deduction, they go for it and pay off those high interest credit card debts. What they did, they borrowed and paid off against their home and paid off the credit card debt. Now they breathe. It's a sigh of relief. Their credit cards are paid off. They've now folded their consumer debt into their home mortgage. Their payments go down because they extend their debt over 30 years. It's the smart thing to do. Their neighbor calls to invite them to go shopping. The Memorial Day sale is on. They promise themselves they will just window shop, but they take a credit card just in case. I run into this young couple all the time. I mean, he runs into people like that all the time. Their names change, but their financial dilemma is the same. They come to one of my talks to hear what I have to say. They ask me, can you tell us how to make more money? They don't understand that their trouble is really how they choose to spend the money they do have. It is caused by financial illiteracy and not understanding the differences between an asset and a liability. More money seldom solves someone's money problems. Intelligence solves problems. There is a saying a friend of mine uses over and over to people in debt. If you find If you find you have dug yourself into a hole, stop digging. By the way, that's where I'm stopping today with the reading. Says, but this quote is interesting. It says, if you find you have dug yourself into a hole, stop digging. That's the reading. That's why I'm stopping for this video. But he has 2 notes, and I have a question for you. Note number 1 is, this is from Robert. Cash flow tells the story of how a person handles money. Cash flow tells the story of how a person handles money. And then the note number 2 is from Robert again. Remember, he puts notes in the book. He calls it taxes and entitlement programs. Taxes and entitlement programs. Taxes around the world are getting higher and higher as social demands for tax dollars require higher property, income, and sales or value-added taxes. Higher incomes create even more of a bracket creep as tax rates become more progressive, meaning steeper. Taxes become steeper to pay for social services, also called entitlements. Today, the government faces serious challenges as settlement programs like Social Security and Medicare face insolvency. That's Robert's notes, 2 notes for you to take to remember. But my question is for you. Now, this couple, that he was talking about, after they get this credit card debt and they decide to consolidate and pay it off, I mean, they borrowed against their house and they paid off the credit card. What should they do next? What do you think? According to him, they went shopping. They went shopping with the card, saying, oh, just do window shopping. But I guess they started shopping again, and the credit card went up again, and the cycle, the rat race continued. So, and these were people who had some money. Remember, they had 2 incomes. One income was enough. They could have used the second. What would you do? Because remember, they were in an apartment, and 1 income was enough to pay for all their bills at that time. And they had the second income. What would you do with the second income? Would you go buy the house, or what would you do? Or okay, that I would need. I'm asking for a comment on that. Or later, after they consolidated the debt, now they're in their house and they paid off the credit cards. What should they do next? Cut up the credit cards, like some people say, cut them up, keep them, or what? What do you suggest? What's a lesson? Okay, that's it for those who come daily. For those who came here for the first time, please, my channel has a daily schedule. I record these daily. Hopefully I continue. If you continue to watch them and invite more people, I'll continue to record them. We'll finish this and go to another one. I'm almost halfway. And then, okay, this is daily, 1 p.m. USA Eastern Time. USA has many zones, but Eastern Time is my time. I'm in Virginia. So if you can mark it, please come onto the premieres. That's when we support the message better, because you are telling YouTube these videos are important. If you come as I premiere them, you come and watch immediately while it's premiering. And I appreciate you who are doing that, because then YouTube will suggest to other people. But on Friday, I skip the books and I do a live. Come live with me. We'll be there on live, 1 p.m. US Eastern Time. That's Friday. And then on on Thursdays and on Sundays, 30 minutes earlier, which is 12:30 US Eastern Time, I have videos on YouTube tips and business tips Thursdays, and then motivation on Sunday. So that's my schedule. For those of you who want to get the book, a link below takes you to my website, honestsoul.com, and it's just Amazon. Only I'm an Amazon associate, but this is free. I got the name finally. I went and saw how you sign up for this book. The regular books, the podcast and all that, but that's very interesting. I looked at it today. They offer you a lot for free. 30 days. Go check it out. It's called the Regular Audible Plus. The Regular Audible Plus will give you all the other books and podcasts and all that. If you choose to continue after the 30 days, you pay, I think, $7.95 per month. But this one, you're going to find it in what they call the Audible Premium Plus. The other one is Audible Plus. This one is Audible Premium Plus. So make sure you're signing up for that and search for this book, Rich Dad Poor Dad, and make sure they give you, like they call it, a point. The point they give, it will give you this for free for a whole month. But if you search in the regular one, you won't find this book. It's in the Audible Premium Plus. You don't lose anything. Just you put in your name and email address and something. I think they ask for a card. I think. Me, I have the account and I have this book, audio. If you get 50 people to consistently come here and watch these videos and leave comments, if you don't leave a comment, I don't count it because I don't see you. I don't see you. Leave a comment. Once we get to 50, I'll figure out a way to give you my password. So you can get all these good books for free. I'll pay for it. That's how passionate I am about these topics. Please invite more people. And remember that link is still in the comment and at the end of this one, that takes you to all of them, all the videos. If you want to watch them again, but then I think it could be interesting. Only I repeat things like all the time, could be boring, but you could let it play. It plays like a story. The way we started and keep going, I think it's interesting. Just click one button and let it roll because I put them next to each other. Okay, it's a playlist. Okay, like I always end these videos, take very good care of yourself. Take very good care of your families. Take very good care of your health. Like and leave a comment. Or like up and leave a comment down. But if it's thumbs down, I'll take it. I'll take it. But at least show some action. Give me some feedback. Bye-bye.